admit, I love earnings season, not just because we get to find out more about individual companies, but because there's so much to learn about the state of the broader economy. For example, this week we've been watching the transports. We've heard from a bunch of trucking and railroad companies. They're not boring people. They're very interesting reports, and they're not exactly painting a bright picture. Tuesday, it was the turn of J.B. Hunt. That's a trucking company, which could have been a lot worse, frankly. Then last night, it was Knight-Swift, another trucker that saw its stock plunge nearly 6% today. Then this morning, we got numbers from Union Pacific, the first major railroad to report this time around. And though the company beat expectations for the reporting quarter, it also lowered full-year guidance, sending the stock down nearly 7%. So why should you care about the truckers or the railroads? Because nobody understands the economy better than the transports. There's a reason the Dow Jones Transport Index peaked nearly a year ago. That's right when the price of moving a shipping container from Shanghai to Los Angeles peaked, too. Since then, it's actually been in free fall. In September of last year, that shipping container cost just under $12,500. Now it's at $2,500. The last 6 months have been particularly ugly.
The house of pain.
Meanwhile, we've been hearing about softness in the trucking industry all year. Trucking rates are way down. And who can forget the horrific disappointment from FedEx last month? One of the worst shortfalls I've ever seen, with some very dire commentary about the state of the economy. Remember, we spoke to FedEx CEO Raj Subramanian, and that interview, frankly, was a gut punch. He was adamant that we're headed into a worldwide recession. Took my breath away. With FedEx freight volumes declining in every segment around the world, and he's a terrific executive with a great purview. Unfortunately, nothing we heard from the transports this week has changed that negative narrative. Let's take them one by one so you know what I mean. Now, J.B. Hunt was the most positive, which, believe me, is not saying much. When the trucking company reported on Tuesday night, they actually delivered a nice top and bottom line beat, 22% revenue growth year over year. Headline numbers look good, but while the stock initially opened up a few bucks yesterday in response, it quickly fizzled, finishing the day up just 7 cents before plummeting more than 4% today. People really started reading through this stuff. Why? Because J.B. Hunt's got problems. While the company's been able to fix some of the supply-related challenges that have been holding them back, like the shortage of truck drivers or service quality from their railroad partners, they're still concerned about the economy. Even though CEO John Roberts would only refer to it vaguely as, and I quote, the uncertainty of macro conditions, end quote, you better believe that what's everybody was thinking about when they listened to this conference call.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.